Good morning, beautiful people. This is Freedom Fighter. Today is June the 25th. Goldilocks provided two articles this morning. The first one is by the Kansas City Fed. Remember, this is the Kansas City Federal Reserve, and that is on stablecoin insurance that they're looking into. The second one is by the European Central Bank, and it's a European Central Bank announcement. That's in regards to a trial, and I'll explain in a little bit what that is. A trial of 48 participants on wholesale DLT, which is distributed ledger trials, and that also included the Hong Kong Monetary Authority, the HKMA. That's a bombshell article. I'm going to get to the first one very quickly. All right, on the Kansas City Federal Reserve announcement, it explains in regards to stablecoin insurance. Goldilocks says, bottom line, the study showed that stablecoins were discovered to be much higher than bank deposit insurance. I would imagine most folks know what bank deposit insurance is, but this shows there are two benefits that the Kansas City Federal Reserve is realizing is a result of having stablecoin insurance. We all know June 30th out that are coming with MiCA regulations that will become law out of Europe for stablecoins. So this is all connected. Remember, everything is connected to everything. So the two major benefits for a bank to have stablecoin insurance is one, profit. Banks are for-profit institutions, so it's profitable. Bottom line, in the banking world and business world, when it comes to the bottom line is the bottom line. So it's profitable to their bottom line to have stablecoin, not only regulations, but stablecoin insurance. Number two, the second major benefit is stablecoin insurance is much higher than bank deposit insurance. Therefore, it's more protection for us as depositors, as consumers, and therefore it's much higher protection for the bank itself to have stablecoin insurance. It's no different than, let's say, if someone has $100,000 insurance policy, well, someone who has a $200,000 insurance policy has more benefits. And if more cash value, more profit. No different. So that is what the Kansas City Fed is looking into right now. Goldilocks continues and says, despite these cost benefits results, the cost of insurance will be easily offset by interest accumulated on stablecoin reserves. That's where the profit comes in. More interest is accumulated for the banks by having the stablecoin insurance, which goes to the bank's reserves, to their balance sheets. Goldilocks says, in other words, the benefits outweigh the burdens of moving forward with stable coins to represent a country's currency. So just think, countries around the world who are all moving to have stable coins to back each country's currency, they will look to have stable coin insurance to help add more profit and more protection for them. Goldilocks says, look for stable coins to begin moving the payment side of the new digital financial system along in the near term as MiCA regulations are about to become law on June the 30th. Now, here we go. Next article, European Central Bank announcement. The ECB, European Central Bank, announces 48 participants in wholesale DLT, which is distributed ledger technology, including the HKMA. HKMA is the Hong Kong Monetary Authority. Hong Kong connects and does trade with over 100 or some odd countries around the world. Just think about that. And in order for one country to have a stable coin, Every country that does trade with that country must also have stablecoins. So this is all connected when it comes to stablecoins, but also in regards to digital ledger technology, which are trials that are being implemented at the central bank. I'll continue to read. The Euro system, Goldilocks says, is currently carrying out wholesale digital ledger technology settlement trials with the focus on central bank money. I'll explain in a moment about those trials. The focus of this trial, Goldilocks says, is on the interfacing and the use of central bank money, wholesale CBDC as money on the QFS. Remember, folks, wholesale CBDC, central bank digital currency, is totally different than retail central bank digital currency, or some may say central bank digital coins. Big difference between wholesale CBDCs and retail. Wholesale is bank-to-bank protected CBDCs, where for us as consumers, our privacy is protected. Retail CBDCs is a different ballgame, and they're trying to work out the intricacies of privacy regarding retail CBDCs, but this has nothing to do with retail and has nothing to do with us and our privacy, because our privacy is protected. I'll continue. Goldilocks continues to say the trials involve real payments. Real payments. This is important. The trials involve real payments with volume limits and simulations. The hope is to find interoperability on the payment side of the central bank's ability to move money through the new digital banking system. All right, I'm going to skip down to the very last paragraph, and I would encourage y'all to go back and continue to read this article. But Goldilocks says the last paragraph, to be clear, this is not a pilot program where the simulation of money is processed. This is a trial. This is a real trial. That being said, a trial utilizes actual money to process through the system. So what Goldilocks is saying is this trial is real money moving through the quantum financial system. Wholesale CBDCs will be utilized for our currency exchanges to move. They will move on the digital ledgers within the QFS as wholesale CBDCs. Think about it. Wholesale, central bank digital currency, or central bank digital coin, whatever you want to use. Central bank. What is the central bank of Iraq? A central bank. What is the central bank of the United States? The Federal Reserve. The State Bank of Vietnam is the central bank of Vietnam. The European Central Bank, so forth and so on. Our currencies, whether it's dinar to the CBI, dong to the Central Bank of Vietnam, USD to the Central Bank, which is the Federal Reserve, so forth and so on. The Bolivar to the Central Bank of Venezuela. All of the central banks throughout the world are and will be connected as wholesale central bank entities for the currencies that are connected to those central banks. And what this is showing us is real money, real trials. The analogy that Goldilocks used in explaining this to me this morning was this. Think of a doctor who is in residency that is practicing sort of like a trial, if you will, on real patients. Once that doctor in residency passes the point of their trials, they go into the field, into the workforce, with the training wheels no longer on them. They will have now a point of moving to real patients with no trials, but real active and live patients no longer under a residency. Think of this as being the trial of money moving, real money moving through the central banks as on a residency, like a doctor. They're preparing to go live out into the field, out into the world on the QFS for real live participation and movement of money throughout the system. It's like testing, 1, 2, 3. They are testing the system with live currencies, live money moving through the system. If you so choose, click on the links that Goldilocks has provided and shows you what the European central banks are doing. No coincidence. This is in alignment with coming out of Europe. The central banks of Europe, June 30th, the MiCA stablecoin regulations coming out of Europe. I'm going to share also with you, and this was in consult with Goldilocks this morning. Beneath, you're going to see a link that I have provided that shows also a screenshot of the central bank of the United States, the federal bank, showing where gold, literally gold, is on the books of the Federal Reserve, held in the account of the U.S. Department of Treasury. So this is proof that the Federal Reserve is no longer in control, but they will and they do answer to Daddy, named Mr. U.S. Department of Treasury. So when you think of the article that Goldilocks provided, especially from the European Central Bank and wholesale central bank digital currencies, we have the central banks, the Central Bank of the United States, the Federal Reserve, that rolls up to the U.S. Department of Treasury. And guess what? All banks around the world ultimately roll up to the U.S. Department of Treasury. Who's in control? Think about it. Who is manning the ship? Think about it. Here you have the proof that Goldilocks is providing you in black and white of what's happening real time, the trials for wholesale privacy. Remember, wholesale CBDC is our privacy. Then we have followed up here in the United States with our central bank, the Federal Reserve, rolled up to the U.S. Treasury, and it talks about the gold. Remember, Goldilocks has always shared. We are going back to gold. We're getting ready to go into a gold standard, ladies and gentlemen. Pay attention. Focus. If you have questions, please feel free to come into the Goldilocks QFS Dialogues room. We're here to answer any questions that you have. We love you. God bless.